Welcome to the Tesla Economist. Please hit the thumbs up and don't forget to subscribe. So I'm sure everyone is feeling much happier today, given we're approaching almost a $700 stock price again, which is a much more comfortable position, I'm sure we can all agree. If you invest in Tesla long enough, this is something you do get used to, and after seeing these dips after a while, you do become more numb to them, particularly when you focus on the long term, and bring in reality to the fact that Tesla's cars last year only consumed just over 30 gigawatt hours of batteries. And they say Tesla in Berlin alone will do 250 gigawatt hours a year of batteries. Although for those of you who bought in at $800, you did well to hold, especially if you are new to Tesla and investing. Having said that, being numb to the drops also makes you less excited for the up days too. You're desensitized both ways, at least with these sorts of swings. But if there is some real announcement that suddenly makes Tesla more valuable, then that's exciting. And just to the contrary, if there was some actual bad news that Tesla dropped for a reason, then that would be disappointing as well. But these are just market swings that we're seeing and shouldn't faze you too much. And you might think there is bad news being posted about Tesla continually, about how they're losing market share, but when you get deep into those articles, they always turn out to be nothing more than FUD. So why is the stock up so much over the last couple of days? Well, the rumours are that deliveries might actually beat market expectations, but possibly not quite as high as my expectations. But I'm sticking with my conviction. I feel like my China numbers might have even been a little bit pessimistic, but my Fremont numbers were perhaps somewhat optimistic, so they somewhat even themselves out. However, a small YouTuber like myself has no sway on the stock price. But Dan Ives of Wedbush Securities does. For the first quarter of 2021, Wedbush is raising their Model 3 and Y estimates to 160,000 units from 132,000 units. For Model S and X vehicles, Wedbush revised estimates to 14,000 units from 12,500, which is a total of 174,000 deliveries. Bear in mind, I actually did production numbers and not deliveries. In my opinion, that matters much more than actual deliveries. Hence why I excluded S and X. All sorts of things can go wrong with deliveries, making it too arbitrary to predict. Although I might have used the term interchangeably in my predictions, I was referring to production. And we should hear delivery numbers in the next day or so getting close now. Tesla also announced they're going to hire 10,000 people at Gigafactory Texas next year. As far as I can tell, only 2,000 people work at Shanghai, and that appears to be both the Model Y and the Model 3 factories. This is 5 times as many employees. Tesla have a capacity of 450,000 at Shanghai. 5 times 450,000 is 2.25 million capacity. Not to mention all the gigapresses, etc. that will be used there, meaning less parts, likely implying less staff. However, also bear in mind some of those staff might be working in the battery factory too, and there is no battery factory in Shanghai. Either way, wow. A very underrated piece of news in my opinion. Of course, it wasn't just Tesla up today, but the Nasdaq itself rose 1.5% too, and S&P actually reached record highs. This could be attributed to Biden's $2 trillion infrastructure plan, which some are calling a sugar rush effect in the market, or a sugar rush on top of a sugar rush even. Part of this includes the Biden administration to ask Congress to extend incentives that have spurred a US electric vehicle market that still trails EV adoption in economic rival China, proposing a $174 billion investment to win the EV market. Biden also sounds intent on building a national network of 500,000 EV chargers by 2030, which is a crazy number. I mean, literally, I don't think it's possible, although it does sound like a foot in the right direction for Tesla. But the market is concerned with inflation. Although we do have the Federal Reserve saying they'll not raise rates until at least 2024, which if it's the case, we'll have 3 more years of the economy running hot. There's no arguing that we've seen a boom in asset prices, but an actual economic boom itself yet is arguable. There are too many people still in lockdown, too many businesses that have yet to really operate to their full potential, and a lot of pent-up aggregate demand. Look how much money so many people have made as of lately. Their houses have appreciated, their stock portfolio has gone through the roof. They want to get out there and spend some money, and this will be what causes inflation. On the other hand, a favourite economist expression, The world is a different place since the last time we experienced high levels of inflation. A succinct term for inflation is too much money chasing too few goods. But what if now, if there is a demand for such goods, that with the efficiencies in China, with their levels of manufacturing, that they are actually able to meet the supply of the demand? In addition to that, a lot of products are even digital these days. For example, if more people want Netflix, then Netflix just need to install some more servers. They don't need to set up huge factories. But that does bring us to the possible inflationary issue: semiconductors. A lot of products require microchips, and we're already hearing about shortages. The world can't make them fast enough. Even Microsoft and Sony are struggling to bring out enough of their new Xboxes and PlayStations. Of course, Tesla needs semiconductors too. I recall reading somewhere that it would cost something like $10 billion for Tesla, or anyone for that matter, to be able to have their own microchip factory in association with Samsung. That's a lot of money, and likely a route Tesla would avoid if they could. Vertical integration only makes sense to a certain point. We talk about Tesla being battery constrained, and them doing all they can to rectify that. But semiconductors might be something a little bit more out of their hands. Although it sounds like they have a good partnership with Samsung, and will be making their chips in Texas. And I'm sure Tesla are on top of the situation as much as possible. The market is fickle, and I'm sure you're all familiar with Warren Buffett's quote about it being a voting machine in the short term and a weighing machine in the long run. So try not to focus on the short term. And congratulations to all of those of you who saw it as an opportunity and picked up some extra shares. I also couldn't resist as soon as it went under 600. It just feels too cheap for Tesla stock. In fact, it felt very cheap. So instead of buying stock, I bought leaps. Leaps are like call options that don't expire for another year or two. And I bought both 2 for next year and 1 for 2023. I paid about $200 a share for the 2023, and it has a strike price of $700. This is 2 years' time. Can you imagine what could happen to Tesla in 2 years? We have Berlin and Austin ramped up. We have Model 2 launched. Level 5 autonomy potentially achieved. And of course, any new announcements or advancements that could happen over the course of 2 years. In addition to that, if inflation is possibly on the way, and if it gets out of control, then these leaps also hedge that. That would depend on the assumption that it hasn't taken down the market with it. But this is also the reason I hold Bitcoin. It's my hedge against inflation and super high interest rates. Except governments can't afford to raise rates because they can't afford the interest, as they're in so much debt already. So the government moves from monetary policy to fiscal policy. But I'm reminded of Winston Churchill's quote: "I contend that for a nation to try to tax itself into prosperity is like a man standing in a bucket and trying to lift himself up by the handle." And for the record, I am in no way suggesting you buy options or leaps. This is just a strategy that suits my financial situation and belief on economic future, which no one can predict anyway. I like to hedge though. I also like to buy as much Tesla stock as I can, and this was the way that enabled me to. And by the time the options expire, I hope to have enough money to exercise them. I must have done about 50 option trades with Tesla now. Most of them more or less broke even, but there were just a few that did really well for me, like over 1000% returns. In reality, it is like gambling, and with options in Tesla, sometimes it's so hard to believe what can happen with the stock. For example, we had options for the S&P, but then Tesla announced a split, and they went up 500%. But we decided to hold on to the options and wait for the S&P indexes to buy into Tesla. We ended up only about 200% up in the end. With Tesla, the buy the rumor and sell the news mantra holds very true. In reality, when I'm not using it as a hedge, this is more just a bit of fun for me on the side. It's not my investing strategy. I obviously follow Tesla very meticulously, so on the odd occasion, when opportunity is staring at me, I just might dabble. They do say that only 3% of professional investors can beat the market. So why try and go against those odds? Time in the market over timing the market. So once again, don't play options unless you really know what you're doing or can absolutely afford to lose the money. Some people just like to gamble too. Anyway, it's nice to see a green day for Tesla. Hopefully get a few more and see a big jump with deliveries. Thanks for listening. Please hit the thumbs up and don't forget to subscribe.